So, as it says on the tin, taxation and Bitcoin. What will we cover? Good accountant, you have to lay out the plan. Number one, the Irish taxation system as it is today in 2025. Although the two tax heads that are relevant to Bitcoiners, a tax head is a type of tax. In the same way as rugby and football are types of sports, there are two types of tax we're going to talk about today. And the last one, what's coming down the track. If you don't know what's coming down the track, you can't be prepared. You need to be ready, okay? So, who am I? There's my big smiley head. Bought my first Bitcoin in 2017. Same as the rest of you, I didn't buy enough. And that's my regret, but you know what? The next best time to buy it is today, as everyone keeps saying. I've worked for 25 years as an accountant and as a tax advisor, so I'm not really new to this. I worked in both Ireland and the UK and finance controller and finance director with various companies of various sizes. Set up on my own in 2004, looking after the SME sector, which is basically small businesses who couldn't afford a full-time accountant and people who needed to file tax returns, and we'll go into that later. So, CryptoCount, what is it? I set up CryptoCount in 2023. I think I was the first accountant in Ireland to be paid a Bitcoin invoice, which was from Zaprite in September 2023, and I'm really proud of that. So I decided to ditch the legacy accounting business, and I set up a personal tax compliance service for Irish tax resident Bitcoiners. In plain simple English, that means if you live here and need to pay tax, I'll look after your tax form. Simple as, doesn't need to be complicated. Next one, there was an Irish Times article at the end of January where they interviewed me in relation to my Bitcoin adoption, and rather than putting it up here, it's on the website, you can have a read of it. But basically I created a distinction on them between Bitcoin and crypto and told them what they needed to be doing and what I believe they need to be doing and the direction we need to be going. I also, in addition, have written the Irish Crypto Tax Guide on Koinly, which is the most widely used crypto tax software in Ireland. I've used various ones. I think Koinly is very good. Why? Because it works. There's a bit of work on it, getting the reports together. We're still at the early stage of the evolution of crypto tax accounting software, but I think in general, it's the best in class at the moment, and I'm happy to continue to work with them. So, two tax heads I mentioned earlier. The first one is income tax. Second one is capital gains tax. I'll go through both just to give you a brief overview, again, to let you know what you need to know. This isn't going to be a degree course in taxation. It's just the basics of what you need, because really beyond that, you get in someone to do it for you. So income tax. The tax year runs same as the calendar year. We were April to March until 2002, and we ran a 9-month tax year. People of my generation will remember it. And we pivoted to the calendar year. So we're 1st of January to the 31st of December. In Ireland, you must register for income tax and file an income tax form known as a Form 11. If you have more than €5,000 in any year in non-PAYE income. So PAYE income is the salary from your day job. If you have other income apart from your salary of more than €5,000, you're legally required and obliged to register for income tax. The vast majority of these people have a rental property. And it usually happened where a fella had a rental property or had a house he lived in. He met someone else who had their house. They got married, they moved in, they lived in one, rented the other. They were accidental landlords, as the Irish Times calls them. So more than 5,000 a year, you are obliged to register for income tax and file that form. When do you file it? If you're registered for income tax, you file your 2024 income tax form before the 14th of November 2025. It used to be the 31st of October, you may remember. But in an effort to incentivize people to file online, they give you a 2-week extension. So basically, it's now the middle of November, in plain simple English. 98% of returns are filed digitally online. The days of posting them to Limerick is gone, thankfully. Okay, so they're filed digitally, and that's the end of it. Income tax in Ireland. 2 other things I need to point out to you. If you earn money from mining or staking in any of your activities, they are treated as income for tax purposes. Okay? So if you have mining, staking, airdrops, anything of that nature, it's income. If you're registered for income tax, there is also a capital gain section on the income tax form, the Form 11 I mentioned earlier. So a self-employed person who files the Form 11, if you have a capital gain, you populate the capital gain section of the form. If you don't have a capital gain, leave it empty. Now, if you're a PAYE employee and you don't have more than €5,000 per annum in non-PAYE income, what do? Very simply, you file a CG1 form to report any capital gains or losses. It's really important, not just gains. You must file your losses as well, and we'll come to that later. So if you made a capital gain or a loss trading Bitcoin, you could have a loss after the collapse of 3 arrows Celsius, whatever you have in yourself. A lot of people got hammered very badly in previous years. So file the CG1, record the loss. That's income tax done. We're going well. What is a capital gain? Capital gain is a gain arising from the disposal of an asset. Very simply, Bitcoin or shares. You buy Bitcoin for 10,000, you sell it at 40, you've made a gain of 30. Well done. Shares, same thing, if you made a gain. If you've made a capital gain, you may have a CGT, capital gains tax liability. I didn't say you do have one, you may have one. So it's very important. If you have a capital loss, it can be carried forward. So for example, if you had a loss of €5,000 last year on your Bitcoin activities, you file a CG1, you've got a $5,000 loss. This year it went better, you made a 10 grand gain. You put the $5,000 loss against the 10 grand gain, bringing it down to 5 grand of a loss, or 5 grand of a gain, okay? So it's very important to register and record your losses. Not that I'm happy that you have them, but you may as well get use of them by offsetting them against a future gain. The loss can be carried forward indefinitely. So there's people of my generation who got hammered in bank shares 15 years ago. They're getting the loss now carried against a current gain. The current capital gains tax rate in Ireland is a horrific 33%, and the personal exemption is €1,270 per annum, which means that the first €1,270 of your gain is not taxed. So if you made a capital gain this year of €3,000, you take $1,270 off it, which would leave, what, $1,730, and that's taxed at 33%. If you don't use that $1,270 exemption in any one year, it does not carry forward to the following year, so you can't roll them up. And the other point to note on that is that losses from previous years must be used up before you can avail of the $1,270 exemption. So again, it's a matter just of getting your ducks in a row, get it lined up, get yourself organised. In addition to the sale of Bitcoin, there are two other things you can do that are known as taxable events. You're not going to like the first one. Sorry, I'm here to give you that. I'm here to give you some knowledge. If you swap a crypto for Bitcoin, it's deemed to be a sale for CGT purposes. So keep it simple. You bought Ethereum when it was €2,000. You thought it was going to go to the moon. You decided and realized what it was, and as Dinny said, we're very early. You decided to swap it for Bitcoin. In tax language, you simultaneously sold your Ethereum and bought Bitcoin. Now, if you swapped it at a lesser value than what you bought it for, some of you will twig, you've made a loss there. Correct and right. You've made a loss to be included in your CGT calculation. So never forget, people say to me, I haven't done anything on crypto, I just bought a few things. And I say, did you swap stuff? Oh yeah, that's a sale. And they immediately go, oh, didn't know that. So if you're swapping crypto regularly, you are triggering a capital gains event. Okay, a taxable event. The other item, which isn't as big a concern at the moment, is that if you purchase anything with Bitcoin, it's also deemed to be a disposal. Now, I'm not talking about coffee. This is a big ticket item. You buy a house, you buy a property, you buy a car, you buy something big. Say you buy a car for €10,000, you agree to buy it in Bitcoin. You've sold 10,000 of Bitcoin at that moment. So again, there may be a capital gains tax consequence depending on what you paid for that originally. Okay? Now, if there's one slide you take away today, and if you want to take a photograph of it, go for it. If there's one slide, and if any of you sleep, no problem at all. Just wake up for this one, because this is going to cost you money. Okay, this is really important. Capital gains tax pay and file obligations. And you always hear the revenue talk about pay and file. They never say file and pay. because the pay is more important. Now, for capital gains tax purposes, the calendar year, January to December, is divided into two distinct parts, okay? First part is from the 1st of January to the end of November, so the first 11 months of the year. If you make a gain in those 11 months, you must pay the tax on that gain before the 15th of November of that year, which is 2 weeks after the 30th of November. So you haven't got very much time. I'll say that again. If you make a gain between January and November of 2025, you need to pay the tax on that gain before the 15th of December. I'm filing 2024 capital gains returns at the moment by the dozen, and every one of them is late with their payment. Because they thought, I'll make the payment when I file the form. That's not the way it works. It's pay and file. You pay first, then you file. The second one, to give you the month of December. If you made any capital gains that month, you have until the end of January in the following month to pay the tax. Again, some people do a crude approximation of what they reckon they owe, make the payment. If you've overpaid it, you can get it back. So my advice to you, if you sold, keep it simple, you sold 50 grand of Bitcoin today. 1/3 of that is 16,666. Take the 1270 off it, which is what, 14. Pay the 14 grand on account. So you have the money in the pot. I'll come to the why of that in a moment, but it's really important. So that's when you need to pay. Part two is file. You need to file the details of the capital gain before the 31st of October the following year, when you file your Form 11 or your CG1. When you're filing these forms, it will pop up, you've already made a CGT payment, correct and right, so you give them the breakdown of the liability, the number of disposals, the net proceeds, and whether there was a capital gain or loss for the year. Then you must subdivide whether it was in the January to November period or in the month of December. So again, you're just giving them the details behind the amount that you paid. But the key to this, guys, is to pay the tax in the year you paid it. Last sentence, if you do not make the CGT payment and file the form on time, you will pay a surcharge. The surcharge, in plain, simple terms, is 10% on top of the amount of tax that you owed. I filed one the other day for a guy who owed 80 grand. He had to pay 88. It cost him 8 grand in tax because he hadn't made the payment on time. So this is so important. You've got to make the payment in the year you make the gain. File the form the following year. You can go back to sleep now. Okay, actually, you know what? Yeah, you might want to be asleep. Future developments in Bitcoin taxation. What's coming down the road? There are a couple of things coming down the road, and I don't want to frighten anybody, but I want to give you the truth. I'm not here for my witty conversation or my analytical insights into Bitcoin. I'm here to tell you what you need to know. In late 2023, the European Council approved DAC 8, known as the Directive on Administrative Cooperation. This will be in effect by 2027. In total, 48 countries inside and outside the EU, basically the OECD countries, they've committed to implementing this directive. So again, it's a directive on administrative cooperation. It's not a suggestion, it's not a request, it's not an appeal, it's a directive. And if someone gives you a directive, it's kind of stern in nature. DAC 8 requires both EU and non-EU based crypto asset service providers, i.e. crypto exchanges, to report all relevant crypto asset transactions. So there's an onus on your Coinbase, Kraken, whatever you have in yourself, to report your transactions. I decided to go for the horse's mouth from the next quote on this, so you know I'm not making it up. If you want to read the Revenue Commissioner's 2023 annual report, you can go for it. The sentence I pulled, and I only pulled one sentence, you'll be glad to know, it says, "This data will be shared among international tax authorities, ushering in an era of increased transparency." So basically, you're Irish tax resident, you open an account in an exchange in Germany, Cyprus, wherever you have in yourself. That exchange is legally required to report to the Revenue Commissioners the nature of your crypto asset transactions. That's it. The other thing that's coming down the road is the European Union are developing a tool for verification your tax identification number, your TIN, your PPS number as we call it. So when you're asked for your PPS number in a foreign jurisdiction, the number you give will be cross-checked to make sure it's accurate, correct, and is yours. What does it mean for you? In a nutshell, your transactions are visible. You need to be aware of it. Basically, compliance is mandatory. It's not optional. End of. And you know what? You can philosophize and jump up and down all you want, but it's up to you. The revenue commissioners will have access to all of your trading activities and crypto exchanges, so they know what you've been doing, regardless of where the exchange is located. Therefore, you should be transparent and accurate in reporting your capital gains and losses. The penalties for not doing so are severe. Penalties can range from 10% up to a couple of 100%, depending on nature of the error. Was it deliberate? Was it accidental? Was there cooperation from the taxpayer? How long was it going on for, etc., etc. Final comments. You'll be glad to know. If you've made profits from Bitcoin, you should deal with the tax aspects of your gain in an accurate and timely manner. Accurate, obviously, if they ask any questions, you've got verifiable responses, and timely, because if you don't pay the tax on time, you'll pay an effective capital gains rate of 36.3 instead of 33 when you add on the 10%. So it's important to be accurate and timely in what you're doing. Our tax system in Ireland is based on self-assessment. Again, think of it, self-assessment. So it's up to you and no one else to prepare an accurate, honest, and complete tax return and pay what you owe to revenue. It's an old cliche, fail to plan to fail. Go to Míle Maith. Yes. When the question is, at what point does trading become income as opposed to capital gains? It depends on how often you're doing it and if you have other sources of income. If you have what we call a day job, and you're going to work every morning, and you're doing this in the evenings and the weekends, it's very. I wouldn't expect the revenue commissioners to take the view that it was a full-time job and a source of income tax. However, if you weren't working in a day job, as it were, and you were doing, this was your main source of income, again, they look at it, do you have any other sources of income? And that's really how they would come at a judgment on it. Is that okay? Yeah, I mean, if you're going to a day job during the day and you're doing this evenings, weekends, I can't see it being a problem.
Even if you're actively flipping every weekend or every month, say.
But you see, you have another source of income that's taking up the bulk of your time, so that would justify it. Okay, no problem at all. Yes.
Sorry, those new regulations that might come into, when will that happen? How are they enforced now?
Good question. The official word is they're coming in and they'll be in by 26, 27. So I suppose my attitude, and maybe it's because I'm a cautious by nature, to me, if they're coming, you need to work on the basis that they're going to be coming so you don't get a shock when they do. They'll come in at some point.
Are they there now?
As we sit here today, no. Sorry, 1 second. Sorry, this man's waiting patiently.
You mentioned reporting your losses.
Yes.
So I wasn't aware you had to report any losses.
You do. Do you know what? If you'd asked me that question 10 years ago, I said you wouldn't really have to. But I know from my dealings with the revenue commissioners, they've become more insistent that we can't see the loss. So all you do is the year, let's say you made a loss in 22 after FTX. Right. You file a capital gains return for 22, showing a loss of whatever. Because you don't owe anything, there's no financial penalty, and 10% of no tax is no tax. So there's nothing to pay. But you're registering on the system. How are you? I lost $6,000 in 2021. Please put it on the system. And then you have it parked there. So when you quote it in your 2024 return as a loss put forward from a previous year, you've got the backup for it.
Can you offset that loss?
Yes. Yeah, so in that example, if I had a $6,000 loss and I made 10 grand, I bring the 6 forward against the 10, I have 4, I take off the 1270 and any other fees, and then whatever's left, you pay the 33%. Okay? Yes? Sir. Indefinitely. You can go back as far as you want. But what I say to lads in that situation, have some documentation. I mean, I've literally dealt with people with Anglo-Irish bank shares, but I said, show me some proof on the base. You do this on the basis that revenue says, okay, where does that loss come from? Yes. I have deliberately avoided mention of limited companies. No, I have, for the simple reason that A, it wouldn't affect a huge percentage of the audience today, and B, the regulatory environment in Ireland is not at all friendly to limited companies buying Bitcoin. And it's not something, as a rule, do I think it's a good idea, yes or no? No, I don't.
Can I just tease that out? Just one bit. Is there a possibility if you're trading through a limited company, it comes under corporation tax at 12.5%?
Companies pay capital gains tax.
Is it still considered capital gains?
Yeah, it's a capital gain by the company, and then the other thing you'd be subject to is what is closed company surcharge of undisputed investment gains within 18 months of year end. They attract a 20% surcharge in your corporation tax rate.
Okay. Yeah.
Which is why I said put on the helmet and go the other way.
Okay, thanks.
Okay, you got another call here.
When the new regulations kicks in, will the exchanges be required to report on the transactions from when the regulations kicks in, or all the ones previous to that?
Beautiful question. I would imagine they'll do it from the date it's enacted. I cannot see them, and I don't know this, but my gut feeling would be they wouldn't go retrospective. It would be from the 1st of January. It's going to be 1st of January 26. This has been a movable feast. I mean, there's DAC 8, so we've had DAC 1 to 7. It's a bit like James Bond. There's loads of them, you know.
Okay, one more question here, and I'll go up to the lady there in a minute.
You better go over there, you know.
Hello. Just so I understand, a gain or a loss, can that only be realised when you sell the asset, not the appreciation of the asset?
Yes, it's when you sell or swap. There was a comment earlier about Denmark looking at bringing in a CGT on unrealised gains. Personally, I can't see it happening. No, so it's not until you sell. As one of our Dublin Bitcoin guys says, don't ever sell anything and put Ciarán out of a job.
Thanks very much.
All right.
Okay, we have a few questions down, but I'll get this lady here as well first. Hang on.
Sorry. So I sold a little bit of Bitcoin there in December. So should I have reported that in January?
You should have paid the capital gains tax if there was any due before the 31st of January, but then it needs to be filed before October of this year.
So if it was this January, okay.
When did you sell the Bitcoin?
December
24.
Yeah.
So it needs to be filed on your 2024 capital gains tax return, either a CG1 or a Form 11, which is due to be filed before the end of October.
So I shouldn't have to pay it in January of this year?
You should have had to pay it in January, unless you had a loss forward from a previous period, which could have been offset against it. See, not saying that's the beauty of it, but that's why, you know, it's important to keep track of your running total, as it were. No problem at all.
Here as well. There's a few questions down here as well. Here.
How you doing? Yeah, it's your nightmare question about companies holding Bitcoin. I was told it should be held as an intangible asset or something. Is that correct?
It would be technically classified on the balance sheet as an intangible asset, but the problems remain if you were ever to sell it.
Okay.
And that's when the issues arise, because you have closed company surcharges, you have capital gains, and it has to be taken out as salary, which again is subject to income tax rates on top of the capital gains you already paid on the sale of it.
Okay. It's a quagmire.
Yeah, it is.
Okay.
That's a good way to put it.
All right, brilliant. Thank you.
Sorry I couldn't give you any better news on a Saturday afternoon.
Sorry, Ciarán.
Yes, Darren.
Are you seeing any evidence that the revenue is interested in who's holding Bitcoin and who's been holding it for a long time, i.e. who the secret super rich might be?
I haven't seen... The revenue's focus, and it's understandable if I was the revenue, is there tax to be collected here? If so, we want to get it. And that really is the revenue's focus. I mean, I have had a number of clients who have come to me on the back of revenue inquiry letters. I mean, it's a widely known fact that money has been transferred from 500,000 Irish bank accounts to crypto exchanges, which is 1 in 10 of our population, which by any international metric is a high number. Now, they're not interested in the guy that put 50 quid in to buy a doggy coin, but they're going to go top down. And they're going to go with the people who moved significant amounts of money to crypto exchanges who may or may not have filed anything. And that is their focus. And to be honest with you, that's where the focus should be. And I think that's where they're going at the moment. But the fact that there's a greater level of, they can see under the bonnet, might be a good way to put it, and they can see what's going on, and their understanding levels mightn't be great for any tax authority at the moment, but it's only going to get better. And they're going to take on people who know what they're at. They'll pay them well, they'll look after them, they'll give them a career path, and suddenly they will become quite fluent at how to understand this and how to interpret it. So, you know, my advice is just file it and it's peace of mind and that's it.
I'm curious in terms of tax percentage between short-term and long-term capital gains. So some other European countries, if you keep it for a longer time, a few more years, you pay less. How is that in Ireland?
I wish I was German or Portuguese or Belgian. In Ireland, it's a flat tax rate of 33%. It doesn't matter if you owned it for 1 week or 20 years. There is no distinction between long and short. And again, it's something as a country we need to get our act together in. We've been ahead of the game on pharma, we've been ahead of the game on tech, we've been ahead of the game on so many things, but we're so far behind. It's embarrassing. Okay?
Hold on. How you doing? Thanks very much. You know your annual tax allowance every year?
The 1270?
Yeah, well, you know, you say you have 45,000 tax-free allowance every year.
Oh, you're talking income tax, not capital gains.
Yeah, but if you over earn on Bitcoin, does that go on top of your?
No, income tax and capital gains tax are like football and hurling. They're both sports, but they're different types. Income tax and capital gains tax are 2 different types of tax. Income tax is levied on your salary, whether you're PAYE or self-employed. So as you say, and you're right, the first 45,000 you earn is at 20% plus PRSI plus USC. Everything above that is 40% plus PRSI plus USC. However, on the other hand, going to the other side of the house, which is why I subdivided my talk into the 2 distinct arms of taxation. Capital gains then is a completely different kettle of fish in that you bought what you bought, you sold what you sold, you made the gain or the loss that you made, and that's filed separately on the Form 11 income tax form or on a CG1 form. Is that okay? Yeah.
I was just wondering, I heard on Twitter, I was reading some guy, and he was saying that you could go to Dubai for a year, set up a company over there. And I was thinking, what about shooting over there for a year, cashing everything in, and then coming home? Like,
this is why Twitter can be great, and this is why Twitter can be terrible. Because I'm going to introduce you to the concept of ordinary residence. If you spend more than 183 days outside of Ireland, and actually this is the time because we're in May, so June is halfway. If you leave Ireland before the end of June and don't come back till next year, you're not resident for this year. However, you need to be non-resident for 3 years before you're out of the Irish capital gains tax net. So if you went to Dubai now for the end of 25, all of 26, and all of 27, on the 1st of January 2028, you can sell your Bitcoin and pay no capital gains tax. That on?
Sold it then, would you buy it back immediately, or do you have to wait for a period?
I don't think you have to wait for a period.
You could just like sell it.
Well, why would you sell it?
No, but if you're like non-resident and you're coming back next year, so you could sell it before you come back.
To lift the cost basis?
Well, to avoid capital gains.
You're trying to do a wash out. No.
Sorry.
No, there's no wash out.
So you're resident, say, in the Middle East,
Yeah.
right? And you're away for the 3 years, right?
Yeah.
But you plan to come back next January.
Yeah.
My question is, can you sell it in December, and then your capital gains liabilities are gone, right? Because you're non-resident.
But why would you sell it to buy it back, given that what's the benefit of... I don't... The only thing you would do is you would set the bar at your cost of acquisition is now the price you bought it back for, having sold it previously.
Absolutely, yes. I mean, if you buy it for, say, X and you sell it for X plus 50, you're going to have capital gains, yeah?
I can't see a reason why you wouldn't do it. It'll be unusual, as Tom Jones said, but, you know, you could do it.
Can I ask a slightly tongue-in-cheek question? Sorry, it's bad as over here. It's tongue-in-cheek, but given how tax, you know, a significant portion of our sweat equity funds malevolence and global tyranny, what's the point of having fuck you money if you don't say fuck you?
In the words of Jack Hackett, that would be an ecumenical matter.
Sure, it's a quick one. If I bought 10,000 euros worth of Bitcoin, and after some time that becomes 20,000 euros, if I sold only 10,000 euros of that 20 euros, am I due capital gains at all? Or?
You're due capital gains because you sold half your Bitcoin, so therefore half your purchase cost was 5, half your sale price was 10. 10 minus 5 is 5, minus the 1270, pay capital gains of 33 on the balance. Sorry.
Okay, thanks a lot. And if you want to get in touch with Ciarán, go to Crypto Count and he's outside. Thanks a lot, thanks a lot, thanks a lot. Great job.